Let's be real, the financial world is noisy, right? It can feel totally overwhelming trying to find a clear path. So today, we're going to cut through all that chaos. We're going to give you a solid framework to help you grab the wheel, take control of your financial journey, and, turn all that confusion into real confidence. Let's get into it.
Wow. This quote, it really hits home, doesn't it? It just perfectly captures that feeling when the market is under serious stress. It feels like the whole system, the entire boat we're all on, is just taking on water. And when you see headlines like that, it's so natural to feel completely powerless, Like you're just a passenger on a ship that someone else is steering, or maybe that no one is.
And that brings us right to the big question, the one we're all asking. When the market just feels like pure chaos, what do? What's the right move? Do you panic? Do you just freeze up and do nothing? Or is there another way? Is there a way to navigate these waters with an actual plan? Well, that's exactly what we're going to break down right now.
All right, so first things first, let's just acknowledge what we're up against. This isn't just a simple case of market ups and downs. We're in what you could call the investing labyrinth. It's this super complex, sometimes really disorienting maze of information, different strategies, and a whole lot of risk.
And it is so easy to feel lost in there, especially when you look back at history. There have been these incredibly long stretches, like that 13-year period starting in 2000, where major indexes like the S&P 500 gave you almost nothing, barely 1% a year. People call these a decade of nothing. And in that kind of environment, just sitting around and hoping for the best, that is not a strategy. That's a recipe for some serious disappointment. But here's the good news. You do not have to wander through this labyrinth with a blindfold on. What you need, what we all need, is a map, a framework that guides our decisions. And that map, that framework, is exactly what we're going to explore today. We're calling it the 4 pillars of investing, and it's a structure for every single financial decision you'll make.
So let's lay the foundation. Pillar number 1, the big picture. Look, before you can even think about picking a stock or any specific investment, you absolutely have to understand the world it lives in. You got to look up and see what kind of sky you're under.
This is what we call sovereign fundamentals. Honestly, the best way to think about it is like the weather system for the entire market. Everything, and I mean everything, happens in its shadow. We're talking about these massive, powerful forces like government debt, interest rate policies from the big central banks like the Fed, GDP growth, inflation, all of it. These things create the climate that every single company has to survive and operate in.
So with that in mind, where does something like the S&P 500 fit into this whole big picture? Well, the S&P 500 is basically a basket of 500 of the biggest companies in the U.S. We call them large caps. These are the giants valued at over $10 billion. It's a super important benchmark, no doubt, and a huge part of the landscape. But it's really crucial to remember, it's not the entire map. Okay, so once we've got that big picture in view, it's time to zoom in a little. We need to learn how to speak the market's language, and that brings us to our second pillar, which is all about reading the signs.
This pillar is all about something called technical analysis. Now, let's be super clear. This is not about having a crystal ball that predicts the future with 100% certainty. It's not magic. Instead, it's about using charts to get a feel for trends and momentum. We're really just asking 2 simple questions. What is likely to happen, and when is it likely to happen? It's the tool that helps us confirm our big picture ideas and, this is the important part, time our actions.
Now here's a perfect real-world example of that. You hear people talk about the S&P 500 index all the time, right? Its ticker is SPX. But here's the catch. You can't actually buy an index directly. It's just a number. So what you can buy is an exchange-traded fund, or ETF, like SPY, which is specifically designed to copy it. And if you look at their charts, you'll see the movements are pretty much identical. This is how you take a big market idea and turn it into something you can actually invest in.
All right, so we get the environment, we can read the charts. Now what? Well, Pillar 3 is here to completely redefine the goal of investing. It's not just about hoping an asset's price goes up. It's about something more active, generating consistent cash flow.
For so many people, investing means just one thing. You buy something, cross your fingers, and hope the price goes up. That's called appreciation. And hey, that's great when it happens, but it's only half the story. There's this incredibly powerful alternative, which is to focus on generating cash flow, getting regular, consistent income from your assets. The goal here is to build up your asset column, to own things that actually pay you.
So how do you actually do that? How do you generate that income? Well, one of the most common ways is just owning stocks that pay dividends. Simple enough. But you can also use options. For example, you could sell what's called a covered call on a stock you already own. It's kind of like renting out your shares for a fee, and that fee is called a premium. Or you could sell a put, which is basically an agreement to buy a stock at a set price, and you get paid just for making that promise. These are active strategies designed to make your money work for you month in and month out. Now we've arrived at what might be the single most important pillar of all. If you think of the market as this vast, unpredictable ocean, you absolutely must have a plan for when the storms hit. This is pillar 4, your financial lifeboat. This quote just says it all, doesn't it? You can't control the market. You can't stop a global crisis or a sudden crash from happening. But the one thing you can control is your own preparation. You control whether or not you have an exit strategy. You know, the story of the Titanic isn't really about an iceberg. It's a story about not having enough lifeboats.
So here's the critical takeaway. Every single investment needs an exit strategy before you ever get in. It's a really simple 3-step process. First, you define your entry price. Second, you decide on your profit target, where you'll take your winnings. And third, you define your stop exit, the point where you say, okay, I was wrong, and you cut your losses to protect your money. This simple plan, this is your lifeboat.
Okay, another huge piece of this risk management puzzle is understanding something called correlation. Don't let the fancy word fool you. It's just about how things move together. See, you might think you're diversified because you invested in the S&P 500, the NASDAQ, and the Russell 2000. But if the whole market takes a nosedive, guess what? They're all going to fall together because they are highly correlated. To build a truly solid lifeboat, you need to find assets that don't correlate or maybe even move in the opposite direction. That's how you balance out your risk. So, we've walked through all 4 pillars. And really, it all comes down to one single powerful question you have to ask yourself. Are you approaching your financial life by just hoping, or are you actively building?
I mean, these 2 images just capture that choice perfectly. The hoping mindset means you're giving away control. It's passive. It leaves you vulnerable to all the market chaos. But the building mindset, that's about taking control. It's about using the 4 pillars, fundamentals, technicals, cash flow, and risk management to build a solid, sturdy structure. You can't control the storm, but you can control the quality of your shelter.
So how do you become a builder? Well, it really boils down to just 2 things. First, you need buying power. That's your capital, the money you can put to work. And second, maybe even more importantly, you need financial education, the knowledge, the know-how to use that capital wisely. Because without the education, that buying power is useless. Heck, it could even be dangerous.
And that's really what this is all about. The ultimate goal isn't one winning trade. It's gaining the financial education to build a system, your own system, that works for you in any kind of market. We've laid out the 4 pillars. We've given you the blueprint for the map. So the only question left is, where will you start?